MV3 Traders Futures Trade Radio is brought to you by The Ultimate Trader's Guide, your one-stop shop for the most valuable income-producing information on the internet. Go to ultimatetradersguide.net to learn more. Link in the description below. All right, what's going on? What's going on? Let me get my audio check stuff together. Want to see how I'm coming through. Cool. All right, so I just wanted to kind of jumped in here a little early. There won't be a trader triggers today because I got I may be getting distracted. So at some point this morning, got some maintenance stuff going on. So I don't want to get distracted while I'm trying to go through my stuff or whatever. So I may end up getting distracted this morning. We'll see how. They always put like a time frame of when they're going to come through, but it's never a specific time. So, but what I'm going to do today is just a screen share, and today it'll just be a screen share and maybe a little bit of narration and the music. I'm still getting set up with some of my pre-market stuff. By the way, I hope everybody had a good weekend. I do expect this to be like a low participation week with the holiday and all that stuff. We haven't even crossed the 100,000 or 100K in the volume for NQ, which is the one that I usually keep the main focus on. So I'm expecting pretty much most of the week to be like that. They threw a curveball in there on us for Wednesday where just FOMC had to get it in one more time. So maybe that'll be an interesting day in the afternoon. That's the only day that we have stuff on the calendar. As well as some other economical stuff with building permits and core durable goods and jobless claims, and then the typical crude oil inventories, and then we got some new home sales. So Wednesday is a full schedule, but other than that, today and tomorrow there's nothing really to pay attention to. And of course Thursday we got the holiday. And then Friday is supposed to be an early close. Usually I don't even trade Friday or anything like that. So, and I'll be working that day anyway. I have other obligations that day. So where I may end up working this week is I'm doing the live stream today, of course. And then I may do a trader trigger special. Maybe either Wednesday or Thursday morning. So let me run through my checklist one more time before I really get going. Where do we stand so far? So not a whole lot of volatility overnight. Throughout I think up until like the London session, we were hovering around PR -1. Then we dipped during those London hours, but into the bear zone. Made a quick revisit to some MSRP around -1, and we've been hanging out between. So that, after that little quick retest, found some supply, went on an inventory hunt to -2, gathered some inventory down there, just a little bit of budgeting, and up to this point, we've made it back to find some supply off of MSRP and PR -1, around 670. So we got the supply range between 670 and 650, with less than a minute to go before the open. Usually, from my memory of this week of the year, the volatility is usually really low. Of course, there's less participation, but price, they can structurally, it can do. I've seen it do pretty much everything. I remember when I started, like the first couple of years, you would have like really slow trends, and then the following years I would see some range bound stuff, or you may have like quick volatility spikes. So in terms of the structure, what it could structurally do, the sky's the limit. But typically what we see during this week is low volatility, and we may get a shift into that, like I mentioned earlier on Wednesday. All right, so we've surpassed the bell. Not seeing much of any additional excitement that we usually see at 9:30. Back at that supply point at 670. Quick response. Now we're lifting supply, and I am missing a window. There we go. I just realized I was preparing for everything, but a lot of times I don't look at the rest of my watch list before trade. Sometimes I just pay attention to the NASDAQ. But sometimes, a lot of times I try to see what else is going on in the other indices, and I didn't do that. I haven't done that yet this morning. I'm looking at it now, and YM is kind of doing its own thing. It's made it back to its PR 50. So structurally it's somewhat the same. It's just in relation to its power range, it hasn't moved as much as NQ or ES. Also RTY. So they're all trading. NQ, ES, and RTY are trading similar to each other. YM is has a bit more long bias to it. Complete sell-off with crude. They just completely went on a absolute inventory hunt. Hitting its power range moon in the bear zone. GC is trading similar to the indices, but deeper inside of its bear zone. Nice little range between kind of -1 and -4. So it's a decent little range there. And then 6E sold off hard, and it's ranging right above its moon. Right into some MSRP. All right, so let me bring the focus back to NQ. Nice little supply response there off of 690. Haven't really had any triggers as up to this point. Doing some negotiating right now around VWAP, looking for lower inventory. Looks like we might be potentially setting up shop here between 630 and 650. We got automation just below 650. And that gives us a nice supply range between, I would say, 645 and MSRP around 655. Was a drop of supply mechanically off of automation. About to go. Gonna mute my mic for a second. All right, so hopefully my distraction is out of the way. We brought the negotiating or the budgeting that brought our shot back up to -1 to, so we're kind of dropping supply as I'm saying this again, but we just lifted that budgeting phase between 680-ish and or 670 and 650, catching some supply right below that little budgeting phase. After a quick inventory response, had a couple triggers in there, but due to distractions, I couldn't do anything about it. Now we're taking us back up to that main supply zone, right off of 668. Let's see if we still want to catch supply there. We are getting a supply response right into automation. Big inventory response off of automation. For the most part, keeping our, until I was just about to say that, we were keeping the price in these nice little tight ranges. Now we got a supply lift up to 680. I mentioned the 680 earlier, but now we finally got that actual response off of 680. A little bit of order flow up there as we continue to lift supply. Somewhat still on the stairs. That supply at 690 is becoming seasoned. I'll be saying if we're come back into that little quick range that we had between 80 and 90, or 80 and 70. I'll be looking to see if we get an inventory response at 70. So in terms of my movement, I've had a couple of triggers throughout the session. Most of them happened when, you know, I was getting distracted, but I haven't really seen the kind of volatility that I would like to see post my trigger. You know, after, if I would actually pull the trigger at that point, I really haven't seen the kind of volatility that I would like. But, you know, instead, I would just have to be more patient. All of this is tradable. So I can kind of hear people now talking about, I can hear the complaining right now. You know, just like my experience of listening to other people, feeling like this is untradable. And especially if you look at it from a 3-minute perspective, it's just range bound, not really making any movement in either direction. So I know a lot of people would call this to be like a untradable price action, but there is a way. I can confirm there is a way to trade this. It's just a matter of what frequency do you hold. Back inside of that 690 to 680 zone after a quick little inventory or supply push. And we are, inventory wise, we are also lifting inventory, kind of taking the stairs right off of automation. Makes my automation literally look like stairs. Very mechanical as I'm looking at this in hindsight. It's like a confirmation. You know, it kind of triggers me to do some sentiment research after I'm done trading, is to see what people are saying about this price action. A lot of times, especially with NQ, it gets a lot of flack for how volatile it is. But then when it slows down like this, you know, it's still not good enough. You know what I mean? It's just, people still end up complaining about it. Just an interesting thought that just crossed my mind. Maybe catching trader trigger vibes, but I'm gonna hold off on that. Yep. You gotta play the game. And in my personal opinion, that's the only way to really see it or to even recognize it, is the actual, you have to get into the game and play the game. I've learned so much more from participating and getting in the game and making mistakes in the game. A lot of times, you know, being completely outplayed, I've learned so much more in all of that than just sitting back and watching and doing what I do, or what I call popcornizing. Speaking of what I'm going to do after I finish my session this morning, I don't know how I forgot this morning. So I've already recorded my next video. I'm going to try to get that out either tonight or tomorrow. And it's going to be about, by request, how to use Sierra charts on a Mac using parallels. So with that being said, if you have any requests, definitely make sure you let me know, because I'm actually going to try to start leaning heavily back into Sierra chart and these other different platforms. So be on the lookout for the next video. And that figuring that out has actually been really helpful for me, because it helps me when I'm like not at home and I get an idea about something within Sierra chart, or something just with my strategy, or something that something related to how I like to trade or whatever. And with Sierra being my main platform that I trade off of, it's kind of difficult to do that when I'm not at home, to explore those different ideas and stuff when I'm not at home. But now that I actually like Sierra chart like on a Mac, I like it on parallels more than any other way that I've tried. So, this has been like, exploring this has been, and figuring out all of this stuff has been kind of a game changer for me, so that I can explore all of these different ideas and stuff when I'm not at my main trading PC. And I think, there may be a version 2 also, because I forgot to mention some stuff. I did see to where somewhere down the line I saw where Sierra was talking about they were working on a version that's compatible with Apple products. But we'll see. I wouldn't hold my breath for that anytime soon, but in the meantime, we do have several options, and by so far, parallels being one of my favorite options, to getting that done. Or maybe I make a short. We'll see. So we're still keeping NQ in these tight little ranges. Had a quick little brought price back to PR -1, where we had this nice little inventory response, and then we dropped the inventory and then made that the supply response. So my trade bias has to be short, as by the design of my current strategy. So I haven't had any real triggers as of yet, or any signals. So I'm just sitting back and watching it. Now I'm extremely passive on days where I have distractions. So today may end up being a no trade day, which from my experience has been some really good risk management versus trying to force a trade, or trying to get something in every single day, or trying to just force myself overcoming or getting around the distraction. in terms of risk, it's always has been better for me to just stay passive and be fully away from the distraction before I start, becoming a participant again. Nice inventory response off of VWAP back into automation. Kind of puts price in an interesting point against previous inventory, and as I say that, we get a quick little retest of that point, and we catch new inventory off of 670 once again, 668. So we're doing a lot of negotiating around PR -1. And that's been the case so far. So far all morning. I think we're in the B period now from a TPO perspective. Going on a nice little inventory run here. We got a ways to go before our session lows, but decent little inventory run off of automation down to 630. Had a quick inventory response at 640. So that makes the 640 to 650 zone a point of interest for supply. On some mechanical supply off of 640. See if we get some that painted that for a continuation. So looking at this from a 3-minute perspective, we do have right at the like a couple points away from a 3-minute pivot. That would be around 627. So I can see that we have some volume around, or volume at 622. It's like a point of reference if we make it below the 630 inventory point that's becoming kind of seasoned. All right, there's the push. Got a quick response. So we did see there were some buyers hanging around at 622. The bid was hit at 622, but we continue to drop inventory lower. Got a little bit of front running of my PR -2 level, pushing, continuing to push down into it, drop the inventory. Starting to negotiate off of -2, staying mechanical, collecting some good portion of inventory off of -2. And that'd be 615 as a price. Now we're beginning to lift supply. Slight lift of supply. Got automation, quick supply response right at automation, right below 630. Top of our automation is around 640 as we continue to lift supply. Very slowly and methodically lifting supply. Painting this is that they want to set up shop between 630 and 615. Taking us back to that supply point, that quick supply point. Took us about a tick or two above it. It's really working whatever little orders they have here. we're doing this. They have to, you know, participate with very low participation. Just to get a volume reference, we haven't even made it above 200K yet for NQ, which is really low. It's sitting at 170. So they got to be very methodical and careful about how they execute these whatever orders that they have here, because our wholesale, they have to, you know, they have to respond. There we go. So that did kind of confirm that we are gonna set up shop here between 6:30 and 6:15. It doesn't mean that we have to take price all the way back to 6:15. But, you know, I'm just looking at that as a shop for our wholesale. Let's see how long they conduct business down here. I got less than 5 minutes before the end of my window, so I'm just gonna go ahead and call this a no trade day for me. Get it in tomorrow, Wednesday. Go ahead and start marking off some triggers. So that's putting us in a markup phase. Looks like we're running out of inventory. So quickly make our way back below automation. Well, we're at the low of automation. We did find our inventory. Right now, I'm keeping my eye, as I knew as soon as I was gonna start talking, I just felt it. It was gonna make a big move. But I'm watching this inventory. I'm just keeping my eye on the inventory zones. Are the inventory and the supply zones between? So we got inventory at 620 and at 615, and then I would give a supply range of maybe like it's gonna call it 632 to 640. The way that they're printing this, it looks like they're just preparing to take us out of this shop and take us to the next location. So it will be a watch of those two zones to see how they do that and see what kind of follow through we get. Doing a lot of negotiating around automation, that 628 zone. So that is some mechanical price action, but it hasn't really given us a definitive direction as of yet. I'm watching both sides being attacked at that automation area. Somewhat serving as a little battleground right there inside of our shop. Taking us back into supply. Heavy volume right here, where we're getting some little bit of a supply response. All right, let's see if we can squeeze any sellers that decided to participate there. So far, that's not happening. Put us back inside of the range. Back inside of the shop. Let's take us back inside of that shop so we can renegotiate. Yep, or it just says the margins are tight. We have a buyer, but they have to get every offer at the most valued price. So we have to stay in to block the shop, right? back inside of our inventory. And we've kind of watched two periods of expansion. Should give this more weight, and that's what we're seeing as we start to really drop our inventory. So we're coming into a point where I've marked off as a session low range, but it's a wide range relative to the overall structure. That low is around 596. Right, so we don't have a whole lot of participation here, so we really gotta find this inventory at much lower prices. Also keeping in mind that, you know, as we watch these volatility spikes, understanding that there has to be a match in order for what we see as price moving. So if we do run out of inventory, or if we do run out of supply, and it's not gonna, you know, go straight in one direction or another. You know, it's gonna see that volatility spike, and then, but we're going to see responses within that, because we gotta, in order to do it, we gotta, it's order matching. So we gotta have orders at these different prices before we actually see the movement in price. So it took us, we're looking at somewhat of a look below and fail. It's an early observation. You know, we don't have enough participation, or, you know, to really, you know, get the price to move strongly in one direction. So it does make sense that we had to, you know, we dropped inventory slightly below the overnight session low, created a new session low, and it brought us right back inside of our range. So with the low participation, and then also keeping in mind what I just mentioned about order matching, it does make sense for us to come back inside. I wouldn't necessarily call this a look below and fail yet, but I would look for a little bit more structure, and the way that I'm looking at this is on my tick chart. So if you want to look at it from a 3-minute perspective, the typical way of looking at this is you can kind of confirm a look below and fail above 620. However, that's so far away from the way that they're moving this price, keeping the movement in these tight ranges is somewhat far away from the actual session low, and where we would actually, you know, what would we look for, or what the low that we would look, or the low that we would use as a reference for our look below and fail. You know, so if you're looking at it from, you know, that deeply, then I personally would say that's kind of you're kind of behind the power curve. That would be a bit of over confirmation. So the way that they're printing right now, that took us back into automation. So here's one perspective of how I would look at confirming if we really had that look below and fail, if we're really going to be brought back inside of our sessions range. So we have the supply up here at like between, let's just call it 610, just to keep it simple, around 610. And then we have an inventory range around 596. Now, of course, we got before that we have 600, which is a whole number. That's a psychological number that they like to use to their advantage. So if we make it, I would look for a revisit of those areas of that inventory zone, and then to see what happens there. Do we actually drop the, do we, bring price back there and drop the session low again, right? Which was, kind of take away that look below and fail, or give us an opportunity to have a, so we're just talking about, let me stick to this, because, if I add too many pieces in it, then it's going to become too complicated. Before it's not going to make a lot of sense, right? So with this initial look below and fail, where we just drop the session low, I will look for a retest of this inventory zone below 600. And depending on what happens there, if we find inventory there and then we lift into a new recent high, we find inventory and we lift above automation, then to me that would kind of confirm the look below and fail. But the way that I look at all these confirmations, to me that's a late response. But that's just the way that's the way I would actually read a look below and fail, or that's the way that I would read a confirmation of really any. So if this look below and fail, I kind of set that all over the place, because I got, like, the way that my brain works, I have 1,000 thoughts that come at me at one time. I have a lot of different ways that I'm looking at this and I'm reading this, which can be a gift and a curse sometimes. Simplicity is a strong tool in this business of trading. So here we go. We brought price back to this inventory area, getting a mechanical response off of 600. Now we also at the same time brought some automation down there with us. So we're watching some negotiating. Let's see how they negotiate this value down here. Would not be surprised if they actually do bring price below 600 if we're going to confirm this look below and fail. Kind of in a no orders left behind type of situation, but they're deciding to take price back into supply at the top of this automation. So as an easy reference point, we can kind of look at 615, my PR -2. If we, break and hold above that, that would kind of confirm the look below and fail. I wonder, out of curiosity, Origin, have you seen anybody explain the look below and fail like in detail? I don't think I have. Even the person that I got it from, they didn't explain it, like how they actually read it. Not in regular words, not without making it super coded. So there we go. There's our drop below 600. And we got the inventory response. No orders left behind. Still keeping that 615 as a reference point. We're finding more supply there. Now, the way that that printed, from my perspective, that should take us back to inventory. So if it doesn't, that'll be a good reason or a good indication of a squeeze. And that needs to happen like within the next couple of minutes. Say that I have a way of calling it a touch flash projection. You and me are the only ones I'm aware of using this concept. Yep. I would imagine most people who actually, how can I say this? Who actually project their, their observations in an in-depth way, kind of the way I just broke down the look below and fail. They usually put that behind a paywall. And it's, there's good reasons to do that. Sounds like a topic for a Trader Triggers. So we're kind of out of that frequency of looking for a squeeze right now. Just by the way that it confirmed that we were, well, actually, we are completely out of it, because in that phase, in that cycle, we were actually brought back to inventory. So that was a reset of the cycle. And now the way that this is printed, this is a fresh cycle for me, and I'm not even, everything that I mentioned before is kind of not necessarily completely out of play, but I would, just in the way that I'm observing it, the way I'm watching it, my analysis on it, I would kind of refresh that and look to see what's happening right now, because I don't want to get stuck in too deeply into I don't want to get too stuck into history in terms of how this, this price action, the whole look below and fail thing, that's like old news at this point. And so now we're looking at from a micro perspective. Big picture, you can still look at that, but there's so much that happens for me as a day trader, trying to trade within an hour and all this stuff. To me, it's more significant or more valuable to stay recent. Because big picture, we can still serve as a look below and fail. Usually it doesn't take this long, but again, this is a low volatility week. So things, it is reasonable to expect things to play out a little bit slower than they, usually do. But, for what I'm trying to do as a day trader, I want to stay recent and as current and stay in the moment as much as possible. Yep, definitely a paywall concept. So that's some back office stuff that I need to do. So I'm gonna go ahead. That's gonna end it for me today. Appreciate you as always, Origin. Appreciate everybody that came through and hung out with me, traded with me. And so for sure there's not gonna be a FTR episode on Friday. but I'm planning on doing a trader triggers sometime either Wednesday or maybe Thursday morning. We'll see how my schedule works out. But with all that being said, I hope everybody have a good week. Have a safe and blessed holidays. And I'll see you on the next one. Trade it easy.